What is going on, guys? Welcome to lesson 3 of the Academy. I am going to squeeze about 3 subjects in one video. The first one being how to read an options chain, which brokers you should be choosing when trading options, and how to go over trading views. So I'm gonna show you guys all 3 things in one video. First things first, like which broker should you choose? Me personally, I go with Thinkorswim. You would have to sign up with Charles Schwab. You just go to charlesschwab.com, open an individual account. It's very simple. You apply for options trading, put in all your information honestly, and you get approved for options. I'll probably drop another video on that as well. Once you do, you can download the Thinkorswim app to your phone and the same login you use for Thinkorswim that you create on Charles Schwab. Once you log on to Thinkorswim on your phone or the desktop, I'm going to show you guys the desktop version, but it is the same thing on the phone. Basically, what you are going to do when you are on Thinkorswim is go to trade. Okay, once you're on trade, you could type in any name. Since we've been using Apple as an example, we can use Apple. Let's say I type in Apple once I go here to trade, and let's say I'm interested in that June 18th contract. Right here, it will show you the price that Apple is currently at. Apple is currently at 272.8. Remember, let's say I think it's going to 280. If I think it's going to 280, by June 18th, look at all the things it says right here. Delta, gamma, theta, vega, bid, and ask. Right now, don't worry about delta, gamma, theta, and vega. Those are the options Greeks, which I will get to in the next few videos. Right now, focus on the bid and the ask. Okay, how much does the 280 call cost? Look how calls are on the left side and puts are on the right side. Okay, if I think it's going up, I am going to look at the asking. I always take a look at the asking price. Okay, 280 call cost about 8.90. What does that mean? Remember I told you guys options is giving you access to 100 shares at a much cheaper price. So $8.90 times 100 is $890. So instead of you paying 27,000 for 100 shares, you're paying $890 for 100 shares, a much cheaper price. Look, if I go to April 27th and I look at that 280 call, it only costs 0.70. So 70 cents times 100 is $70. So I get 100 shares for $70, but it expires on the 27th. So therefore, I have less time. That is why the more time you buy, the more expensive the contracts will be because you're safer. You have more time for it to get there. There's a lot of things I have to talk about. For example, ATR, which I will make a separate video on, average true range. There's a lot to cover, but I want to take it step by step. So 280 call. Okay. Right now it's at $900 and then the bid's at 885. The difference, if you guys are taking notes, the difference between the bid and the ask is called the spread. There's going to be a lot of stocks to trade. And if the spread is too wide, I don't personally like to trade those stocks. Um, well, there's nothing wrong with it, but the thing is, if it has a tighter spread, it is easier to get in and out of that contract. So for example, what is the spread on this? It's like a $15 difference. It's not too bad, right? If I go to the April 24th and I look at the spread on that 280 call, 30 and 29. It's only a dollar difference. It's not bad at all. There's something called limit and there's something called market. If I get filled at the market price, it is me paying what it's asking for, the asking price, right? $31 is what I'd pay for it. If I pay the asking price for the 280 on the June 18th, it costs $900. I'm paying the asking price if I get filled at market. Think of getting filled at limit as if you're trying to lowball, right? As if you're trying to lowball for the contract. It's like, yo, I don't want to pay 900 because it's $15 more than the bid. Let me try to lowball. And then you try getting filled closer to the bid. But when a stock has a tight spread, stocks like SPY, QQ, Apple, Amazon, Google, they're very traded. Those are stocks that people are trading a lot. So therefore, you won't have wide spreads on them. And I don't mind getting filled at the market price. I am not going to lowball over a dollar difference. For example, imagine I try lowballing over a dollar and then I don't get filled on the contract because I was being cheap and I tried lowballing, and then the stock takes off without you and you didn't get filled on that trade because you tried to lowball at a limit price. So when the spread is tight like that, it's only a dollar difference, you can get filled at market. Let's say I wanted to get filled on this trade. The market just closed as we speak, but let's say I try buying that contract at 30. This is going to pop up right here. Basically, what this is saying is that you're buying one contract. I could buy more if I want to. If I want to buy two contracts, I can buy two contracts. What type of call am I buying? I'm buying a call, strike price 280 that expires on April 24th on Apple, and it costs $30. So you guys see right here where it says limit. I'm gonna switch it to market because I am not going to lowball over $1. I'm just gonna pay the asking price. And then I confirm and send. And once I do, I can just click send, make sure all the details are good, send it, and I will get filled on that contract. You'll be able to see the trades you're in at monitor. It probably didn't fill me. See, it didn't fill me because the market's closed right now. But basically, this is going to show you how much you're up, how much you're down, how much you paid for everything. And then once you get in and get out of the trade, it'll show you everything as well. So that is how you're going to look at same thing on the put side. If I think Apple's going down to, let's say, 250 by June 1st, that contract, I'm going to look at the asking price. See? The 250 puts, remember, I'm looking at the right side, cost 3.95. The bid is 380. It's not the wide, it's not the most, you could bid on this, but I'm gonna just buy the market price, limit market, and basically this is saying I am buying one contract that I think it's going down to 250 by June 1st. So just to show you guys an example of how to buy a call and how to buy a put, you're gonna either look at the left side or you're gonna look at the right side. Okay, I'm going to explain what all of this is right here on the right side in the options Greek, what the delta, gamma, theta, and all of that is as well. You could use Thinkorswim charts. It's free, It's just going to take a little bit more to learn it. Actually, no, it's pretty simple overall. I'll do a tutorial on this if I get enough comments as well. But basically, it is just the charting platform. The charting platform that I like to use, which we're going to cover today as well in this lesson, is TradingView. I'll leave my link in the description if you do want to use TradingView as well. I personally have always used TradingView. Look how fast it is to kind of maneuver around it compared to Thinkorswim. Is for me personally a way better charting platform. A tutorial on this, we're going to get into this video as well. Basically, three things you're going to want to know. A few things you want to know is when you go to tradingview.com, you just type in tradingview.com and then you go here to watch list. Okay. You're going to create a new list. I'm just going to create this new list and put tutorial YouTube. Okay. Yes, I know I spelled it wrong. Okay. So I'll create a watch list with you guys, kind of a few names I usually would add on my watch list. Let's add SPY. Let's add QQQ. Let's add Apple. Let's add the Magnificent Seven, Tesla, Amazon. You guys are going to learn the abbreviation names as well, right? It's not spelled Apple, Apple. It's AAPL. You guys will learn that eventually as well. Let's add Meta. Let's add NVIDIA. Let's add AMD. These are some beginner-friendly stocks to kind of just go over. Let's add those just for now. And this is how you're going to kind of just scroll through your watches whenever you're creating a watches. You kind of just scroll through it, right? Take a look at the names. And for example, since we're talking about Apple, we'll continue to cover this name. So Apple here, um, other thing you're gonna want to know is time frames. This we will get into further lessons as well. But the time frames, you go from 1 hour, you go to 4 hour. There's a lot of shortcuts you can use, right? On your keyboard, if you're on a MacBook or if you're on a Windows, whatever it is, you can just type in 4H, you'll get a shortcut, 1H, you'll get a shortcut. Just type in 5, you'll go to the 5 minute time frame. Time frames we'll get into when we start covering candles. So maybe it may be a bit confusing to you right now, but time frames is basically the time frame you're studying that chart on the daily chart. Every time frame represents a different candle. Like for example, this takes a full day for this candle to close. Every candle here takes about 5 minutes for a candle to close. But like I said, we will cover that a little bit more later. Everything, if you want to type in a different name, you go to the top left, type in a different name like SPY or whatever, and then you just click enter. On the left side, you're gonna have all your charting tools. So trend lines, um, drawing tools, support and resistance. This we will cover a little bit more when we get into the technical videos. Right now, there's just a tutorial, but there's shortcuts for all this as well. For example, if I want to draw a horizontal line or resistance level, I could just do it that way, or I can click Option H if you're on a MacBook. I think if you're on a Windows, it's Alt H. You just press the two, and you'll be able to draw lines on your chart, support and resistance. But I will explain that in the technical analysis lessons. There's a lot more to TradingView you can do as well. You can set alerts. Basically, it'll send it straight through your phone. You can download TradingView on your phone as well. It's a free app. If I set an alert, for example, I click this little plus symbol, add an alert, and whenever Apple gets to 278, it will send a notification to my phone. There's also a replay feature where you could go back and study your trades or just kind of go back in time. There's so much to it, right? This is kind of like a tutorial to it, but for the most part, those are some of the main things you want to know. The watch list, how to switch time frames, how to type in a name, and when we get into technicals, we'll cover all of this as well. Outside of that, I think we covered brokers. There's multiple other brokers like Webull, Thinkorswim, Robinhood. I think the best ones I say would be like Webull and Thinkorswim, personally the ones that I use. But there's a lot. Those are the main two. And then we covered how to read the options chain, the difference between limit and market, what is a spread, we can to kind of finish it off, let's cover what ATR is, okay? Or maybe I'll set that for a separate video because ATR is very important. Outside of that, I hope you guys took a lot of notes. Those are some of the basic things you guys should need. And in the next video, we're gonna get into in the money, out the money, at the money, and then the options Greeks. The beginner videos are nobody really likes them. It's basics, but you shouldn't be trading options if you don't know any of this stuff. So we have to go through the basics before we get into the technical analysis side of things. I hope you guys learned a lot. And if you guys have any questions, just drop it in the comments. Peace.